Hi guys, it's your boy Malik Mo, or you can call me Malik MX. Yeah, I took trade on Friday, trade on G. So I want to explain how, like, the analysis I took on the trade, and I also make mistake from that trade, and then I want to give you those like examples of what I did wrong, so that you can implement it. Avoid those mistakes so that next time when you also see the same setup, you're not going to repeat the same mistake as for beginners and advanced traders. So let me just do analysis on the GU from daily time frame, which is what we call top down analysis. So let me just cancel this. So from monthly time frame, I checked the overall bias of the market, which is uh price moving from downtrend, strong downtrend, which is price creates lower high, break structure to the downside, creates another lower high, break structure to the downside, and also create another high, break structure to the downside. So this means we're in a strong downtrend in a higher time frame, which is the monthly time frame. So price already come here, like around this market shift side. So price comes here, comes to this area, creates another lower high. Potentially price could restructure to the downside again, like restructure to the downside, but we don't know yet. We don't know. Even though if price want to break structure to the downside, that's not what I'm chasing. What I'm actually chasing is that the monthly time frame I have now is to just check the overall bias of the market. And now that I know that yes, the overall bias of the market in the monthly time frame is downtrend, so I'll just be focusing on this place, this uh this structure to the downside, and this market shift around here, and supply that market touches. So now price could now that price break this structure around here, like break it and started shifting upside, like price want to it's creating another mini lower high or mini bullish order flow somewhere around here. So until it gets to its POI somewhere around here, then that's when price is going to break another structure to the downside. But for now, now that I know that yes, price is in a strong downtrend for monthly time frame, and this place around here, I will use this place as my strong resistance area. It's a supply zone, but I use it as strong area because price must come here, tap this area, this resistance area, come down a little bit, grab liquidity, then lower time frame I might be looking for market shift to the downside in the lower time frame, then look for supply, then so that was my perspective. But now that I can see that okay, price didn't touch the resistance area, so that doesn't mean I can't re-enter the position. So I had to now that I know that price is going in a strong downtrend, price already shift, like it already create supply zone around here, mini supply zone, shift structure to downside. So I can now start moving to the lower time frame to actually check what price is currently doing. So I moved to weekly time frame. What I saw here was like price move here, breaks down after creating this bullish order flow, bullish structure to the upside also, and didn't touch this resistance area. But I don't know the reason why price didn't touch the resistance area. Though it's market evolve, and sometimes market can touch its grab liquidity, and sometimes market cannot touch. But what is more like your major purpose is like wait for confirmation before entry. So now that you have already seen that price have already break structure to the downside somewhere around here, break structure, create first pullback somewhere around here, and that first pullback didn't break structure to the downside. It only give you like 50% retracement before create another high somewhere around here, which is double top. And this double top means price can potentially grab liquidity. Potentially it could, and it might not, but here price grabs liquidity, touches the POI, and also breaks structure to the downside. So when I found out about this, so I was now like my mainly bias now is now like, okay, let me now switch to the lower time frame, to the daily time frame. So now I'll be looking for sales. I'll be looking for sales, more sales to the downside. And the reason why, like, sorry, the reason why like I use this as my POI was because let me just show you an example of what I did somewhere around here. Price was at this POI. This is it. The this is it. Let me explain it very well for you. Price moves to the upside. Break structure to the upside in a strong uptrend. Creates mini low, break structure at that mini low, then grabs liquidity. And this liquidity, institutional orders can be here. Institutional orders, institutional smart money concept, smart money orders can also be here, and it also brings structure to the upside. So that is the reason why I use this as my POI. And I also use my Fibonacci zones around here. So my Fibonacci is around 0.7. So price keeps breaking structure to the upside. So let me mark my Fibonacci retracement level. So from this low, I mark my Fibonacci retracement level to the premium zone. So this is the discount zone, 0.78611. You see, this is a discount zone. This discount zone indicates potentially price could touch this discount zone and start reversing for a little bit before going down, since we already know we're in a strong downtrend. So I have to, like, if I want to sell a position now, I have to just sell to this discount zone, like high probability sell for me. So let's cancel this, and let's cancel this also. It's really complicated for us, just make our chart looks good, clean and fine. So now let's switch to 4-hour time frame. 4-hour time frame. Yeah, we are here. Yeah, we are here. So this is another POI, another like structure to the downside, creates mini lower high, break structure to the downside, which gives us supply zone, first pullback, which could potentially cause liquidity in the future. Price cleared inducement, create mini pullback again, but didn't touches the POI. Then the future price mitigate it again, like clear the liquidity above here, then break structure to the downside. Then in the future price could break this low potentially. So let's delete all this. Now that we already know that yes, we are moving to the downside, like price could potentially move to the downside. So now like our main aim or purpose is our main aim or purpose is to focus on current market price somewhere around here. So I was observing on this POI somewhere around here, or this support zone somewhere around here. So I was waiting for price to touch this support zone. Then after price touches this support zone, I will move to the lower time frame, which is the 15 5 minutes, 3 minutes, 4 minutes, the lower time frame. So then I'll switch to lower time frame after price touches this support zone, this support level, grabbing liquidity, whatever. So my next target will be um, this supply zone. Because why is the supply zone valid? Because it breaks structure to the downside, and it's also giving us an inducement somewhere around here, and this inducement gives us 90% retracement level, because it almost breaks the previous low, the mini previous low. Now price is going back to that POI. So when price touches that POI, then I'll wait for a market structure shift, which indicates shift in structure. Then I'll target this last low. So after price mitigated this supply zone so around here, then I switched to a lower time frame, which is 30 minutes or 15-minute time frame. So after price touches that supply zone, I waited for a shift in structure, which is somewhere around here. Price grabs liquidity, give us shift in structure. Then after price giving us sweep in structure, I saw this liquidity here, because this is an this is POI. I mean the NFP came up on Friday, so I was waiting patiently for NFP to clear off. I was just waiting for this to come out, the volatility in market during the NFP period to come out. Then after then I'll wait for my buying position. After the NFP I was just waiting, but after the NFP I spotted this POI, this long wick rejection candle, which breaks another structure to the upside and gives us this huge imbalance to the upside. This also indicates institutionals are also in the market. They are loading up, they are buying orders somewhere around here, and gives us inducement again somewhere around here. So I uses this as my inducement, and I use this as my POI. I use this leg as my POI. Wait, sorry. I'm having problem with my Arsenal tools. So I use this as my POI. Then I place a buy position around here. And I put my stop loss this protected low, because after price grabs liquidity, pushes price to the upside and also give us inducement, high probability that price will surely break structure to this inducement area. That was an high probability for me, but unfortunately price didn't. Price swept me out. Like, I got stopped out, maybe because another POI was somewhere around here or whatever. So I got stopped out. I was supposed to enter another entry, but price was too fast, so it pushes up to the outside again. I couldn't enter this position. So yeah, I just left the trade like that. So that is how I make my top down analysis to the 15-minute or 30-minute time frame. I also entered the 15-minute time frame, but it was good. I entered the 15-minute time frame. I wanted to use this POI when I switch to the 15-minute time frame, but this POI already mitigated. You see, NFP mitigated this, indicating buying orders will be here. Our new buying POI or model will be here. This is already mitigated zone, but price do its things, even greater liquidity closer to the POI. So I had to place a buy limit order somewhere around here, and stop loss below it, then target next high. But unfortunately price did this thing, and so don't forget to like, subscribe for more content like this. and learn from this so that you won't make the same mistakes. Peace out.